very special guest, Damian Falcone of Damian Falcone and Company. The one guy who does things in the business of loan modification. We're talking on the break, Al, you brought up, not everybody really understands what a loan modification is.
And let's talk about that and what kind of outcome somebody can expect or hope for if they come in for a loan modification. Damian?
Well, I've always, part of what we mentioned earlier with there being probably more than 400 people doing this kind of work, and it went down to 50 got licenses and now probably 5 or 6. There used to be a lot of things going on that weren't so good. So when you hear, oh, loan modifications don't happen, probably plenty of people didn't get them. The reality is, if you go delinquent on your mortgage, just like any other bill you don't pay, anything that gets you back into a current status where any of the terms change, that would be a modification. So, you know, some people, I see them come in and they say, oh, well, I've been living in $1 million house for 5 years and I owe the bank a lot of money. Well, just getting them back to their original payment, having the bank forget about the couple $100,000 they didn't get, that's an achievement.
Damian has taken this other route. You've kept, you have a very, very high success rate. The number of cases that you take is small relative to the guys with the Rolex watches, but when you go in, what is your success rate? What do you end up with?
Last year it was over 70% of our clients had a payment reduction in the form of a loan modification or a lender sanction within 4 months. There's huge differences, and for every free consultation we have, we provide 7 different loss mitigation options. Now, one is not the best for everybody. So let's say you have somebody who, you know, I have $1 million client, the place is worth $400,000. Well, the odds of getting a $600,000 principal reduction or a 5 or 4 is a big stretch. A short sale would be much easier, in my opinion, to negotiate, and actually a legitimate short sale. Now, you've gotten that person out of a $600,000 hole, so that to me is a great deal for them. So there are situations, but like Mark was saying earlier, with sometimes the interest rate reduction is better than a principal reduction. Well, it depends, and that's where banks are experts, and banks attorneys are pretty good. You can, you know, give somebody one deal, but have the numbers. I guess one of the biggest benefits of our software is it does complex calculations that used to take me 10 hours with a calculator to put together 10 different options for somebody that would put into what we do is a life of a loan payment. Like, what will this cost you over the life of the loan? And you start to see different terms and in what cases a loan modification is better than a short sale. And if they're only going to forgive 95% of the deficiency balance on the short sale, at that point, what point is a loan modification better than a short sale? So that changes.
Talk about what you mean by that.
Most of the things I've seen people refer to as short sales do not have a deficiency waiver, which means it was a sale. The seller, the homeowner, the original homeowner, is still responsible for the amount of money they owed the bank. Now, people say short sale, and it's a horrible lie. You know, short means the deficiency was forgiven.
It can be a misleading term or a confusing term, or different people say the same phrase, but it has different meanings to them.
Absolutely, absolutely. And you're talking about money, and you're talking about a lot of money. So if you're going to make a decision of on your home where your family lives, and you got 6 figures riding on it, and somebody uses a word when really the opposite of that is true, you might have just bought yourself 10 or 20 years of problems.
Go back to the $500,000. The $500,000, you sold at $300,000. You owe the bank $200,000.
And somebody says, you know, just sign this purchase agreement. The bank will consider the $300,000, so the homeowner signs it, and then the bank accepts it, but they accept it without saying that they're going to let the homeowner off the hook.
You made the offer. And
finding out something like that after the fact should be a pretty black and white indication that the person working for you, you know, has different feelings about you.
But it's really too late. If a homeowner does that, good luck on getting that. You gotta negotiate that deficiency waiver up front as part of the sale. And if you don't, if you let it go and it closes, the bank has no reason to let you off the hook after that. There's no way.
I've had people come to my office and I say, you can bring your real estate agent or you can bring your inexperienced whoever who did this deal, and now you're on the hook, and for some reason, I guess, they still have to talk to you, but because some people just disappear after they get paid. But I've had people come to my office and they say, well, here's the deal we did, and they are coming after my client for the money. And really at that point it's the client doing most of the talking because they've established between themselves that the service provider screwed up. So at that point I will call a creditor and say, okay, so let's back up. Where are we at? And I've lost a huge card out of the deck, which is you already have the asset,
Yeah.
but it is not sunk. You can still do something, but it's like tying one off on your back.